In New York, this is Bloomberg Technology. Coming up in the next hour, breaking up big tech. U.S. Senator Elizabeth Warren revealed an ambitious plan as she campaigns for president, taking aim at the power held by Google, Facebook, and Amazon. Plus, China's exports plunging 21% last month on the trade war concerns. But President Trump's top economic advisor says Trump and Xi Jinping could meet as soon as this month. Can they close a trade deal? And after some high-profile breakthroughs and setbacks, what will self-driving look like in 2019? We'll speak to a top exec at Waymo. First, to our top story. Democratic Senator and U.S. presidential candidate Elizabeth Warren laid out a detailed plan for breaking up Facebook, Google, and Amazon. Now, in a post on Medium, the senator stated, "Today's big tech companies have too much power over our economy, our society, and our democracy." For reaction, let's bring in Natasha Lamb, is Managing Partner and Director of Equity Research and Shareholder Engagement at Arjuna Capital, and Jennifer Rhee, who covers antitrust litigation from Bloomberg. Jennifer, let's start with just how seismic a policy change this actually would be in terms of the antitrust law that currently stands.
Yeah, I mean, it really is drastic, and I have to think on her part, on Elizabeth Warren's part, this is really aspirational, a starting point to land somewhere else. Because, you know, under current antitrust laws, we really aren't going and breaking up companies just because they've gotten big. We even tried to break up a company that acted in an egregious manner, clearly, you know, an extreme case, clearly anti-competitive. This was Microsoft, and the enforcers didn't manage to get that through the courts and managed to do that. We just haven't really been in the business of breaking up big companies since before the 1960s.
Let's get the investor perspective now then, therefore. Is Natasha, should the US be in the business of breaking up such large companies? There's an argument that it stifles growth. Do you think that's the case?
Well, I think it does. I can't speak from the public policy perspective, but from the investor perspective, looking at not just, financial metrics, but environmental, social, and governance factors at companies, we really do see some, big problems with these large tech firms. I think Facebook in particular, you look at the company and it's gotten to a scale where, the question becomes, is it too big to govern? Can the company effectively govern a platform with 2.3 billion users? And what we see so far is the answer is no. And it's not just it's not just that. The other question is, with the kind of monopolistic power that a Facebook has, it buys its competitors. There's Instagram, there's WhatsApp, and that then becomes part of the platform. And there's not the kind of innovation you would see. It's sort of those firms get brought into the issues of the big firm.
Interestingly, there, talking of Facebook, which Natasha brings up, Jennifer, Facebook has been looking to currently trying to integrate the back end of three key parts of its business: Facebook, WhatsApp, which it acquired, Instagram, that it acquired. Some cynically saying maybe this is preparing to stop any sort of disintegration. Can we see the reverse sort of big acquisitions in such a way? You said it's been very hard in the past, but realistically, could this go through?
Well, the enforcers have in their power now to look at these companies and to determine whether they're doing something which is harming competition, which is anti-competitive. And they can come in and seek a remedy that could include breaking up a company. But as you say, one of the problems is once these companies get very integrated, they call it unscrambling the eggs. It makes it very difficult to impose that sort of a remedy, and some other lesser remedy, regulating behavior or something like that is generally imposed. And the courts are really unlikely to to agree to some sort of a remedy that's going to break these companies up and possibly have some unintended consequences that actually become harmful for consumers.
Natasha, Jennifer was making the point there that perhaps Senator Warren is sort of throwing something out there to be digested by the Democrats, to be digested by the population at large, and land somewhere slightly different. We can think about the Green New Deal, perhaps starting off a chain reaction, a conversation that therefore gets policy in place. What sort of policy do you think is needed? Is it as extreme as Elizabeth Warren is talking about here? Is it something a little bit less?
I think you're absolutely right. I mean, it's about setting a vision and moving the line forward. I don't think that's where we're going to end up, but I do think that there's a fair case to be made, just given the size of these companies, that it does stifle innovation, it limits growth. And from our perspective as investors that are not just invested in Amazon and Google and Facebook, but more broadly in tech and in the economy, we're looking for secular growth opportunities, because we're looking to outperform our benchmarks. So it's important to be able to create an ecosystem that supports innovation and growth, and not get stuck into these more monopolistic paradigms, which aren't really, very free market in the first place.
So as an investor, would you want to see some of this disentangling?
I think there's a case to be made that some of it could be good from the investor perspective when you take a broader view.
Talking a broader view, talking of paradigm shifts, talking of starting a conversation, you have been pushing, particularly at our junior capital, starting a conversation when it comes to the workforce, disparity in the workforce, ensuring that there is the gender pay gap that exists around the world is somewhat diminished. You've asked that, you've pushed for change at the likes of Citigroup, for example. And interestingly, I come from the United Kingdom, where this has been something brought upon by the government, insisting that companies of a certain size reveal their gender pay gap. How is this working for you? How is this working among companies? Is this message landing as you want it to?
Yeah, so one, I'm happy to be here on International Women's Day, and I think it's a good day to have this conversation. We've been engaging companies on gender pay equity for the last 4 years. At this point, we've moved 22 big tech firms, big banks, to reveal their equal pay for equal work numbers. So that's, you and I are working the same job. I'm a man, you're a woman. Are we being paid fairly compared to each other? But when you look at median gaps, and when you look at how the gender pay gap is measured, even globally, women make 77 cents on the dollar for full-time work versus men. That's a huge disparity. It not only costs the economy $1.4 trillion per year, it's also it's a lost opportunity, because we're not putting women in high-paid positions. They're not moving into leadership positions, and it's something we need to look at really closely. So Citigroup a few weeks ago was the first company to reveal its global median gender pay gap. And that was 29%. It's not an attractive number, but we need to be honest about what these gaps are in order to create a baseline from which then to improve and measure progress. And we can't hide behind these numbers that, it's 99 cents on the dollar, versus peers. We need to look more broadly. So I've been, quite inspired by I think the bravery and the courage that Citigroup showed several weeks ago, and we're looking forward to the other 11 companies we have a shareholder proposal in front of on the gender pay gap this spring. Right now, those are all going to go to a vote of shareholders, but we'd like to see more leadership.
It's great to get transparency such as that being driven by your conversation, and indeed by the usual host of this program, Emily Chang's books and the like. We thank you for helping have that conversation on International Women's Day. We thank you, Natasha Lamb, for joining us, our junior capital, and of course, Jennifer Rhee on all things litigation. Now, a story we're watching. Twitter has updated its abuse reporting functions, allowing users to specify the complaint, like if your personal phone number or address has been exposed. The company's first quarter sales forecast last month indicated tepid user growth, suggesting that improvement efforts hadn't yet done much to expand its audience. The move comes after Facebook CEO Mark Zuckerberg announced plans to rebuild some of the company's features with a focus on private communications. Now, coming up, we know the overall U.S. jobs numbers for February, but just how has the tech sector been faring in hiring? We take a look next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Well, it's the first Friday of the month, so of course that means jobs numbers were out, and while the US jobless rate fell to 3.8%, only 20,000 jobs were added in February. But the president's top economic advisor, he's not worried.
I think that top line number 20 1,000 is an absolute fluke, and there are a million reasons for that. Winter seasonals, the government shutdown, the scoring of it, the classification of people working and non-working. I think it's crazy.
Now, when it comes to new jobs, there is a familiar refrain that tech jobs change so quickly, it's hard for people looking for work to keep up. But not so fast. Economists at the hiring website Indeed say that's really not the case. To discuss, I'd like to bring in Bloomberg's economic data reporter, Shelley Hagan. It's a great set of stats, really, trying to lift the veil on technology hiring at the moment, Shelley. And your reporting shows that Indeed is saying, look, yes, some of the talk is pretty worrying, but the walk sort of isn't.
Right. The tech labor market is still very tight, but maybe not as much as people think. Employers are actually having an easier time finding tech job talent than they have in the past. And reasons for that is that there's more job seekers in the tech industry than there have been before, because there's so many job openings for tech. People have been wanting to get into this industry, and as well as people who are already employed in the tech sector, they're actively looking for job opportunities because they know they're out there and they pay high wages.
I'm interested, is this new generations coming through, so more youthful people realizing that they needed those skills and redirecting themselves there, or is it immigration? Because that's something that we've all been wringing our hands about, particularly H-1B visas and the like.
Well, there's boot camps now where you can get non-traditional training in tech, and there's also employer investment in workforce training as a whole has been going down, but actually in the tech industry, it's been going up. And employers, they're training because they want to keep their employees because they know how much demand there is for tech talent.
Dive into where's hot and where's not when it comes to the tech sectors, because you're saying people are repurposing, getting themselves retrained, but are there areas that are really in demand, so to speak?
The jobs really in demand are the full stack developers, so they can do both front and back end work, as well as software engineers. And more specialized engineers that can only, say, do one programming language, they're going more obsolete.
Okay, interesting. What about, therefore, the way in which we're starting to see an overall industry change trend? I mean, are we starting to see pushes and pulls coming from different parts of the world as well? I mean, is US going to be able to ensure that they have this vast quantity of well-trained new areas of pools of talent coming through?
I think what's interesting is that tech jobs aren't changing as quickly as they are in other industries. So that's partly because employers are looking for tech talent that have a broad range of skills. They're not looking for someone with just one specific skill set. So other jobs in other industries are changing faster because of the tech impact. And
because they're becoming technology companies in and on themselves. You know, this isn't going to be a vertical anymore. This is going to be a horizontal, because there'll be tech workers needed in healthcare and in all sorts of a sector, right?
You see in the food industry, for example, some are completely cashless. You can't even pay with cash. You have to use an iPad or other technology.
Okay. The disruption has no end. We thank you. A great set of data expertise coming from Shelley Hagan there. Now, let's talk about disruption of a different kind to a certain extent. Shares of online ticketing platform and Eventbrite dropped as much as, get this, 26% on Friday after messy fourth quarter earnings disappointed investors. Let's get the analysis from Bloomberg's Pim Fox, who helps figure out really what happened here. I liked it. Our producer said event not so bright, and it's
right. Event not so bright. Well, I mean, there's a lot of. This is a website, basically a platform that sells tickets to a variety of different shows that you want to see. You want to go to a Broadway show, you want to go to a theme, you want to go to a music show, whatever it is. But I mean, they've got a lot of competition and they're not making any money. So, I mean, there is that refrain that, you know, if you want people to buy your stock, you probably should be showing them that you've got a plan to make money. They just did an acquisition. They're trying to integrate that. But as you know, there's a lot of competition with companies like StubHub and Ticketmaster and so on, as well as, you know, the traditional way of actually buying tickets, which is to go to the box office. And people do that, and then they resell them. So there's a whole gray market as well. So as far as this particular company is concerned, analysts are coming out today and saying maybe not so fast. They've got to kind of figure out a way to actually start turning a profit.
It's interesting that StubHub was in the press as well this week because of what people are calling on eBay to do in terms of start to diversify itself out, start to.
Well, you got to right. You have the
some of it.
activist investors at eBay who are saying, we really want to split the company up into its disparate parts because we think that way it will unlock more value for shareholders, just like we did with PayPal going back a couple of years.
So you mentioned the analysts there, and we've seen a few downgrades, a few concerns. How could we see this company start to set itself up for profitability a little bit?
Well, I mean, listen, I don't know the internal workings of the company, but clearly, I mean, this is an area that is undergoing the kind of disruption that you were just talking about when it has to do with technology, because the ability for you to access all of the seats that you want or all of the venues that you want to plan either a vacation, a holiday, or even in your home city, I mean, that's something that, I know this makes me feel, quite old.
No.
But yeah, right. But going back just a dozen years, that was something you did not have the capability of doing. You didn't have the visibility into that supply chain. And I mean, that's just the same kind of supply chain as you have if you want to look at the availability of a particular item that's being sold, let's say, on Amazon, right?
Yeah.
They tell you, X number that are left. And so that whole idea of being able to check and see and get that transparency for price and for volume is something that is relatively new. Maybe people growing up with it, they just say, well, this is the way things always were. But for those of us that can remember, you used to have to actually use the telephone, call a human being, and go to the box office.
We have short-term memories here, Pim. I'm
Yes.
interested in the way that you said, visibility. Is there visibility on when we start to see some stabilization? I'm hearing about 2020 is when some analysts are looking for.
Well, I think you could make that case, but I mean, who knows? In a P&L business, you don't really know going out more than maybe a quarter, maybe 2 quarters to really be able to determine how the company's going to perform. And also, you got to think that there is a lot of money that is waiting for initial public offerings, right? I mean, so if you get a choice, if you're an investor and you say, well, I want to invest in Lyft, or I want to invest in Uber, or I want to invest in Slack, I mean, those are big IPOs, right? I mean, you had, for example, in Canada today, I believe, a pretty good Lightspeed, a pretty good initial public offering that came out, I think, $179 million. So, money is not infinite when it comes to investors' portfolios, so they may be keeping a little bit on the side for when these big IPOs come to market.
As it stands, Eventbrite's got 1 buy rating, 4 holds, and 0 sells. Pim Fox, always great to get your analysis. Thanks so much for making us cast our memories back. Now, coming up, is big tech threatening venture capital? How startups are faring as companies like Amazon, Facebook, and Google continue to assert their dominance. That's next. This is Bloomberg. Now, Axios has reported that Sam Altman is stepping down as president of startup incubator Y Combinator. He is set to transition to a chairman role as he spends more time on outside interests like the Open AI research organization. Y Combinator also is said to confirm plans to move its headquarters and its demo days from Mountain View to San Francisco. Meanwhile, Democratic Senator and presidential candidate Elizabeth Warren proposed breaking up big tech this Friday, and she cited lax venture capital investment in her reasoning. In a Medium post, she said that venture capitalists are now hesitant to fund new startups to compete with these big tech companies because, while it's so easy for the big companies to either snap them up, growing competitors, or drive them out of business. She further claimed that the number of tech startups and financing rounds have slumped. Joining us now to discuss is Nicole Quinn, partner at Lightspeed Ventures Partners. Great to have you with us, Nicole, because you've got real expertise when it comes to marketplaces, and certainly Amazon's marketplace is something that Elizabeth Warren is really focusing on. Your first take on whether venture capital is put off from funding startups that might take on these behemoths?
Hi, Caroline. Yeah, I was surprised to read this because I think the best story to listen to is always the one that the data tells you. And if we look at the data right now, the funding environment has never been quite this frothy. There are certainly a huge number of companies being funded, and we haven't really seen a drop-off in any way. And so certainly the VCs that I speak to are saying, hey, we are 10 years through a bull run, and that is factoring into things. Valuations are very high. That is factoring in. But there's really good companies out there raising money, and just the funding numbers, tell a very different picture to the one that Elizabeth is talking about.
Okay, so can you give us any examples or indeed some sort of areas where some of these new innovative companies are still managing to battle their way through despite the behemoths such as Amazon?
Yeah, of course. So there's a company that we've invested in called Rothy's that has really taken America by storm. It's a shoe company made of plastic recycled bottles. And if you speak to the folks over at Rothy's, they've had people leave from Google or Nike, big established companies, and they've come over to Rothy's because they have said these startups are able to see a trend and to really turn it around so that these shoes can go from idea to being in the customer's hands within about 6 weeks, whereas that can take 1 to 2 years at the big established companies. And so I think it's really that nimbleness of startups that is special.
I have to say, if I get advertised via Instagram for a Rothy one more time, I said they seem to have got me in their line of sight, Nicole. What about the ways in which we're starting to see Amazon, interestingly, moving away not just from just online, but really making an indent and rumblings when it comes to bricks and mortar? Talks of new grocery outlets, and also we've seen startups like Warby Parker getting into the mall area, starting to actually revitalize there. What are some of the startups that you're backing, some of these very much predominantly digitally focused companies looking at to retail, to sell to us when it comes to offline as well as online?
I think the offline is going to be an increasing trend for these companies that were originally digitally native vertical brands. I think it's not just omni-channel, but it's more be everywhere that the customer is. And so, yes, we're seeing it with Amazon. We were original investors in Bonobos, and when they started to go into retail, we used to think about it as a cost-neutral marketing channel for them. And so we'd say whenever they open up a store, it actually is very profitable for them because there's a halo effect for their entire online business. And now that's actually shifted so that offline stores can be profitable marketing channels for businesses. So not only are they profitable in the store, and Rothy's see really great sales per square foot, but in addition to that, it's really driving business over to the online side of the company, which is great to see.
Yeah, I like it, looking at some of your portfolio companies there, Nicole, and it strikes me as two women sat here on International Women's Day. Briefly, you're in Girlboss, you're in Goop, you're in a number of companies that are driven by female leaders. Is that something that you look at?
That's something that is certainly very important because I only invest in consumer companies, and as we know, most of the consumer decisions in any household are made by a woman, and so it makes sense to have a really true, authentic founder at the helm of the business. And so, yeah, you certainly mentioned a couple. So Girlboss and Goop are two that we're super excited about. Dote, which is a virtual mall, is one that is really great. And, you know, there's many in our portfolio of female founders.
Well, great to get your perspective, Nicole Quinn. Thanks for joining us today, talking us through your portfolio companies and indeed getting the perspective on Elizabeth Warren's perspective. Partner at Lightspeed Ventures Partners joining us there. Coming up, we're talking President Trump and China trade. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde. Now, earlier on Friday, President Donald Trump was selling the merits of a potential trade deal with China.
I think as soon as these trade deals are done, if they get done, and we're working with China, we'll see what happens. But I think you're going to see a very big spike. A lot of people are waiting to see what happens with the China deal.
But his top economic advisor, Larry Kudlow, told Bloomberg that no deal will be rushed for a deal's sake.
If they're not in America's interest, he will not accept it. That's the only point I'm making. Now, don't read me bearish. I'm not bearish. Neither is the president. But again, this idea of a quick deal just to get a pop in the stock market, I just want to strenuously disagree with that point of view.
Now, to discuss the latest of the China-US trade talks, I'd like to welcome Sam Sachs, New America Fellow of Cybersecurity Policy Fellow in China Digital Economy. On Thursday, she testified before Congress on the challenges for US companies facing China. And in Washington, we've got Sarah McGregor, who leads Bloomberg's US economic coverage. Sarah, bring us up to speed here. How much are we positive or negative on the fact that there will be some sort of meeting in Mar-a-Lago between Xi Jinping and Trump, and a deal done at that?
So the difficult point that we're at now in trying to really ascertain if there's going to be a deal or not is that talks have entered a phase where they're really speaking via video conference and telephone. And so we're not getting regular updates about the state of progress. Of course, we've heard from Trump several times this week that progress is being made. Larry Kudlow seemed to be optimistic today. But, you know, there really isn't a sign, and I think maybe a marker of perhaps how far apart they may remain is that we're hearing that no longer is there really a summit set in sight for March. It might be pushed into April. And we haven't really heard from China, actually, if it would accept the U.S. invitation to have a signing summit at Trump's Mar-a-Lago resort, even in the first place. So we're really sort of at a state of not exactly knowing what's happening behind the scenes of these trade talks.
We can't get a read behind the scenes, but Sam, let's get your perspective of your expertise here, because you were just testifying in front of Congress. What are the things that you're telling them in terms of what China can actually provide here? What's going to be cosmetic? What's actually going to be taken away as real progress when it comes to some sort of trade deal?
At the testimony, we talked about the tough structural issues, IP theft, tech transfer, cyber espionage. These things take time. Last week, Ambassador Lighthizer said, this is where the trade talks are now, so we cannot rush that. And I think the more we see deadlines extended, it could mean they're really going in the weeds on the tough issues.
What would going in the weeds look like? What would actually a good trade deal, and we keep hearing it from Trump again and again, Sam, that we want a good trade deal, not any trade deal. What would a good trade deal look like for the United States?
It gets quite technical. It's things like cross-border data flows, opening up cross-border services, lifting restrictions on domestic procurement. I mean, these are things that the business community has taken forward and said, these are long-standing issues. We have a window now. Let's see what we can get done.
Sarah, your expertise here, because what's been interesting is the tit for tat that's gone on between the so-called hawk, Robert Lighthizer, and of course Trump himself. And we've always tried to read the tea leaves here on how the negotiations are going by who's at the table and which hawk is there and which perhaps lesser hawk is. And from your perspective, is Robert Lighthizer still driving this? Is he still going to be pushing for the type of IP change that he wants, even if perhaps it's not an easy win?
Yes, I think there are two things happening here at once. One is Robert Lighthizer. He knows the issues inside and out. He's at the negotiating table, and he wants the best deal. He wants to address, as Sam mentioned, you know, these intellectual property practices, forced technology transfers. He wants a forceful deal and one that can be enforced. That's the key here. If China reneges on some promises, there can be tariffs put in place. There can be other mechanisms put in place automatically that will punish China for violating the rules of this deal. On the other hand, we have Trump. He's looking ahead to 2020 elections. He's looking at the stock market as a gauge of his success, and he sees the news. He sees when there's good news out about a trade deal, the stock market going up, and bad news heading in the other direction. And, you know, he's really telling his advisors, well, he wants a deal. He also wants to see, you know, he wants to see his stock prices in positive territory.
He does. What does China want out of this? Because we just saw the trade numbers out today, woeful if you're thinking from just a February perspective, down 20% from exports, imports looking pretty bad. China's stock market being forced to pause, it seems, by the government. But what do you make from China's, who's got the position of power here, Sam?
I think that the only position of leverage that the Trump administration has right now is Huawei.
Really?
And look, this is supposed to be a separate track, law enforcement, separate from a political trade kind of negotiation. The lines are blurring. We're talking about China's a national champion that's successful in markets around the world that the Trump administration is trying to dismantle. Meng is in jail in Canada right now, and I think she's a wild card in all of this.
I love that you bring that up because, of course, actually it's been brought out by the Chinese at the moment. We've got a great piece just coming from the Chinese finance minister earlier today. We can take a listen.
China has and will continue to take all necessary measures to resolutely protect the legitimate and lawful interests of Chinese businesses and citizens. This is the bounden duty of the Chinese government. At the same time, we support the company and individuals in question in seeking legal redress to protect their own interests and refusing to be victimized like silent lambs.
Foreign Minister fighting back there. You say this is a political bargaining chip now. How could Huawei, Sam, be it re-embroiled back? Because at the very beginning, Trump sort of said that he could just let her go, perhaps allow the difficulties. Meng Wanzhou could be free to go almost if he so wished it, if it would help with the trade discussion. But then that got railed back in quite a big way.
If Trump releases Meng, he will meet significant backlash from the national security community in Washington. And that's already happening. We thought there was going to be an executive order a few weeks ago that would bar Huawei from participating in U.S. telecom networks. It didn't happen. And I think this is indicative of just how much churn there is within Washington on the issue.
Sarah, is this getting brought back into your conversations that Huawei could be some sort of political chip here? Certainly it's being politicized with the case that Huawei is bringing to the U.S.
It definitely puts the U.S. in a difficult position in these trade negotiations, as much as they want to say there's two tracks, this national security justice track against Huawei, and then the trade track that's completely separate. Of course, it really can't be. And I think it's important to remember that these tariffs in the first place are premised on, the intellectual property theft issues, these issues that the U.S. is facing as China reaches for tech dominance, economic dominance over the U.S., and of course that being a threat to the U.S. economy. So, this is very much woven into part of the talks, and Trump himself has said, entertain the idea. He hasn't said outright he would, but, he could release Meng as part of trade negotiations, or at least, bring that into them. So I think Trump himself has sort of inserted himself into this situation at the moment. But we haven't heard actually from our sources that this is a big part of the talks at the moment. But of course, it's a very sensitive issue.
It is, and doesn't ZTE and Huawei know it? Bloomberg, Sarah McGregor, we thank you so much. Sam Sachs of New America. Great perspective, given you've just been giving evidence. Meanwhile, Chinese bike-sharing startup Mobike is closing down its international operations. The startup is laying off more than 15 full-time employees, as well as contractors, as it retreats from non-Chinese markets. Now, that's all according to TechCrunch. Mobike was bought by Chinese delivery company Waymo for nearly $3 billion back in April of 2018. Coming up, the rise of resale. Poshmark has become one of the most popular shopping apps in the US, selling second-hand clothes and accessories. We'll talk with the CEO of Poshmark next. This is Bloomberg. Now, as the world of retail and e-commerce gets ever more crowded, a new trend is gaining traction among shoppers, the resale market, and it's growing rapidly. And Poshmark is at the center of it, with 40 million registered users on its platform. In the latest edition of our Retail Transformed series, I'm pleased to say we're joined by Manish Chandra, Poshmark founder and CEO in San Francisco. One of our producers was saying, Jackie, telling me that she uses it all the time, Manish, so clearly preaching to the converted to a certain extent. But who's using it? What demographic? How often? What sort of trends are you seeing?
Well, we have about 40 million registered users who engage with the platform 7 to 9 times a day, spending 23 to 27 minutes a day. We started our world as a women's resale marketplace, and today we blossomed to be a full social marketplace selling women's, men's, kids' fashion, both new and used products.
How much has this helped? I mean, you're kind of on trend in terms of Netflix as well, because there's this incredibly popular program at the moment about sort of clearing out your klutz, Marie Kondo having her moment in the sun. Is that meaning that you're having your moment as well, as we all want to get rid of our things and perhaps just own fewer objects?
Absolutely. I think Marie Kondo has definitely been a great trigger this year. But what we've been seeing over the last 6-7 years since we started is a continuous sort of adoption of the reselling paradigm, which has then led to a social paradigm where people really want to have conversations. People want to talk. People want to understand from each other. And if you think about retail, what social commerce is doing is taking back to the old days where retail was all about people and not just about products.
How broadly is this conversation going internationally? What's your footmark at the moment?
We are currently only in the US, although we've just announced that we will be launching in Poshmark Canada later this year. So it's starting to sort of go global. But if you look at larger marketplaces, for example, in China, like Taobao, they've had sort of prevalence of social and social interactions from a long time, and we're starting to actually see a reverse trend back in America and beyond for social commerce today.
Social commerce that you can make a tidy profit out of is the aim, I'm assuming. How do you make your business run? You're obviously helping introduce the buyer and the seller. Where's the cut for you?
We take a 20% cut in terms of the transaction, and there's no other fee. And in that, we provide you with everything from payment processing to helping take care of shipping, to take care of sort of dispute management, as well as any chargebacks and other things. But the key thing for the seller and buyer here is the conversation that we facilitate, the styling that we facilitate, which makes it much easier for them to actually transact, but also discover new and beautiful trends and products.
It's interesting, it was this time last week that I was breaking the news on air about eBay adding directors to the board. They've got, of course, some rather impassioned investors who are moving for change, but eBay has competition of its own, such as Poshmark. What's competition to you like? Is it eBay? Are there other startups that are trying to do the same thing? Where do you find the competition coming from?
So what we find is from traditional retail as well as places like eBay and Amazon. However, our approach has been completely different, which is to empower our community to sort of form a very large social community and in some ways democratize retail. So we have over 5 million sellers on the platform who've uploaded 75 million items. And what that does is it creates a level of diversity which can only be accessed through discovery. And so people curate items. For example, on a daily basis, our community curates over 18 million listings. That's very similar to what you see in Instagram and Pinterest, and not quite the same you see in other retail architectures out there.
You talk about diversity. Let's talk about diversity of a different kind. You're adding more diversity to your board, for example. You've got Serena Williams joining. Talk to us about that particular key hire. It obviously helps from a PR perspective. She's such an incredible brand in and of herself. But what expertise is she bringing, and what's the strategy there for you?
So Serena, we're so grateful to have her. She is, as you know, obviously a very, very accomplished, GOAT athlete out there. But really what she is also an entrepreneur, a fashion entrepreneur, a style icon, but also a champion of our entrepreneurs on our platform, our women entrepreneurs. And that's sort of where we connected at a very deep level. Many of her friends and community are very involved with Poshmark. She herself had been a user. So we think she brings a very authentic and deep connection to our platform and to our community. And that's very exciting to bring that voice on the board and help us scale to the next level.
Looking for any more money to scale?
Currently, we raised about $160 million. We continue to evaluate growth options, but our last round was in fall of 2017. We haven't raised any money since then.
And what's your best-selling kind of items? Like, what are the most popular searches for?
We certainly see trends sort of coming and going. So, for example, recently we saw certain brands being catalyzed by Meghan Markle. But if you were to look at sort of a very interesting category, it's kids sneakers. So we just recently launched Serena Williams' daughter's closet, and one of the hottest items selling were shoes from her closet, which is quite surprising, if you think about it, that kids sneakers are really one of the hottest categories.
As a mother to a 1.5-year-old, I'm not surprised at all, because they're expensive and they grow out of them like that. So I'm all for passing the parcel in that respect. Manish Chandra, we thank you, Poshmark founder and CEO. Great to get your expertise today. Meanwhile, Senator Elizabeth Warren is calling for the breakup of big tech. Now, New Jersey wants to welcome in more companies like Amazon. State Governor Phil Murphy told Bloomberg and myself just earlier that he has spoken with Amazon after they abandoned plans for a new base in Long Island City. He says New Jersey is a good option for any large tech company to invest.
I did speak to them, and I reiterated that the Newark story is getting better by the day. It's incredibly compelling. We have the land. We have the story, the trajectory. I believe it continues to be a great story, not just for Amazon, but for companies like it.
Still ahead, Waymo is now selling its self-driving car sensors. Now, the same technology at the heart of its legal action with Uber last year. How the new business will affect competition next. This is Bloomberg. Waymo is, well, getting into the sensor business. Alphabet's self-driving car unit is now selling the laser mapping sensors used on its driverless vehicles to other companies. That is, as long as those companies don't compete with its robo-taxi business. Joining us now from San Francisco to discuss this is Waymo's Chief External Officer, Takidra Mawakana. Wonderful to have you with us, Takidra. And you talk externally to different stakeholders within the business. How willing and how much appetite is there for this sort of uptake in the sort of scanners and sensors that you provide?
Yeah, so as you mentioned, this week has been so exciting for us, having the opportunity to sell the LiDAR sensors to our customers. There's a lot of excitement about it. First, because it gives us the opportunity to increase the speed at which we'll bring this technology to market, and it gives our customers the chance to employ it in a host of different applications in the non-automotive space. So we're really excited about it.
Non-automotive space. Can you direct us as to where this is being lapped up at the moment in terms of demand and how you're educating the market to it?
Yeah, so for these customers, they, think about warehouse applications, moving equipment where it would be really easy to apply a sensor that could see it in the dark warehouse, so you don't have to keep the lights on. You're able to move things and use these sensors. And so we've already seen a host of customers come in and express interest. We only announced it 2 days ago.
So a busy woman in that respect, but of course, you're having to go out and engage externally on all manner of things, particularly I'm sure about continuing to educate the public about the safety records with self-driving vehicles, the ways in which you're able to work from state to state rather than internationally as it speak. What are some of the key issues that you're having to tackle every single day? What are the biggest challenges? What are the easiest conversations?
I think that, self-driving technology holds so much promise. And so I think one of the most encouraging aspects of this is people are incented to figure out how to make it happen. There's just a recognition that understanding and awareness in the public, as well as regulations with policymakers, haven't been established yet. And so we think, obviously, establishing the right framework to allow for innovation to take hold. We wouldn't be at this point were there not to have been a framework that allowed for that. So that's important with regulators. With the public, we believe that companies in this space really have a responsibility to educate the public. We launched Let's Talk Self-Driving campaign over a year ago now because we just thought, we talk a lot and think a lot about the benefits of this technology, but we sit in the place to provide the understanding of why this technology will be beneficial, why will lives be saved, and what are the uses that members of the public will find extraordinarily helpful in their everyday lives. Back in 2017, we actually started putting members of the public in Phoenix in our cars in the early rider program. And what we learned immediately was that the use cases that they were most excited about were use cases we would all be excited about, getting from point A to point B, taking your kids to soccer practice and commuting to work and going to a doctor's appointment and having a family that wants consciously to have only one car for whatever reason, even if it's financial, but also needs to meet these transportation demands. And so through our early rider program, we've had a lot of feedback about these applications. And then moving into December of last year, we actually took the next step on our journey and we launched our commercial service in Phoenix. Yeah. And so now we have members of the public in the cars. They're going from point A to point B, and we're continuing with our early rider program to learn about some of the transportation needs in the Phoenix community, which we believe will be applicable more generally as well.
Takidra, of course, as a member of the press, we love to sensationalize the competition between yourselves and the likes of Uber, but are you having to work alongside them as well when it comes to this educational point of view?
Yeah, we're happy to work with other, and we think it's important. One of the reasons at this point that we haven't seen a lot of companies in industry, come together to educate holistically is the technology is different. Waymo was founded as a moonshot, as the Google self-driving car project. Back in 2009, we are a company that is only doing this. The only hard issue that we're focused on tackling is, can this technology be deployed to make our roads safer? And so for us, we feel that the safety is urgent. And so we moved forward with the public education campaign. We partnered with Mothers Against Drunk Driving and the National Safety Council, Foundation for Blind Children. You know, we think it's important to partner with others in the ecosystem who have a natural alliance because their mission and our mission are the same. And we believe that over time, as others in industry advance their technology, they too are going to find that as they enter markets, they're going to need to do this education, and we're excited to partner with them on that as well.
Takidra Marokana, I wish we had more time. Waymo Chief External Officer, we thank you for joining us and giving us your expertise across all areas of the educational divide. Now, finally, SpaceX's Crew Dragon capsule safely returned to Earth Friday after a debut test flight to the International Space Station. And the unmanned spacecraft splashed down in the Atlantic Ocean about 250 miles east of Kennedy Space Center in Florida. Astronauts had loaded the vessel with about 330 pounds of supplies to return home. The flight is a milestone for SpaceX and NASA as they attempt to end U.S. dependence on Russia for shuttles to the space station. Now, that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Remember, check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. We want to give a shout out to International Women's Day today. We've been wearing our pins that highlight that still 202 years to go until we get some sort of balance and equality, it would seem. It's a key focus for Bloomberg LP. From New York, this is Bloomberg.